So the question today is, what are the different types of mortgage loans that are available in the marketplace? And typically, there's the traditional four loan types that are available, and then I'm going to throw in two more as well, just for you to consider. So the typical types of mortgage loans, the four common ones are a conventional loan, an FHA loan, a VA loan, and what's called a USDA or a rural development loan. So just to hit on those real briefly, conventional loan is usually geared towards someone with usually higher credit scores, a strong credit history, and typically at least a 3 to 5% down payment or even 20% down to get a little bit better options available to you. An FHA loan is typically geared towards someone who maybe doesn't have as much of an established credit history or maybe had some credit blemishes in the past or a limited down payment. Those are typically easier to qualify for than, say, a conventional loan. Third type is a VA loan, and that is for the veterans that have served our country. So think Veterans, National Guard. If you're eligible for that product, you probably already know. If you've not served, then unfortunately that is not an option for you. Biggest benefit there is no down payment required and no what we call PMI insurance or an extra monthly fee in your monthly payment for not having a down payment. So fourth one that's typically talked about is what's called a USDA rural development loan. Again, no down payment required. There are some income limits with that product. And then also the home does need to be located in a more traditionally rural area or outside of the larger city limits. And those areas are always fluctuating and changing, but it's not available everywhere. And specifically in large metro areas, it's not an option. So those are the four traditional main types of mortgage loans. I also want to throw out there what's called a jumbo mortgage loan. And think high dollar mortgage amounts on that. That changes based on the year. It tends to go up as far as the dollar amount, but if you're into $1 million plus, even shy of that a little bit, we get into what's called jumbo financing. So the requirements are a little bit more stringent and things are looked at a little bit in more detail, and a little bit harder to qualify for if you've got some credit blemishes or maybe your budget is tight or you don't have the assets. They can be a little bit tougher to qualify for. The last one that I want to talk about is a little bit more specific to our bank here at FIBT. And that's what's called a portfolio loan, or also referred to as like an in-house mortgage loan. And that basically means that we look at your situation and it's kind of like old school traditional underwriting. So if it makes sense, we're going to help you out with that loan and we're going to approve it. We tend to be a little bit more, I wouldn't say creative, but customized to your situation. So if maybe something doesn't quite look right on paper and it doesn't fit the hard and fast guidelines of the first 4 or 5 mortgage types, but it does make sense and we can see a path going forward, then we will a lot of times be able to approve that loan. So more of a customized thing that we offer at our bank, and those are traditionally set up to be more of a short-term solution and on an ARM type product that ideally you would pay off that mortgage loan or refinance it in a couple of years and get into more of the traditional secondary market or those first 4 types of loans that we talked about. So hopefully you found that helpful. If we can help you out with anything, let us know, and we will talk to you again soon. Thanks.